Please welcome to the stage our next panel. T. Rowe Price Vice President and Investment Analyst, Andrew Davis. Macquarie Capital Head of Aviation, Aircraft Leasing, and Aerospace Equity Research, Susan Donofrio. And Managing Director and Senior Analyst for the Airline, Aerospace, and Defense sectors at Wolfe Research, Hunter Keay. Phil LeBeau of CNBC will moderate this discussion on The View from the Street.
Hi, everyone. Thank you for the introductions, and if you've been to this in the past, you know that this is always a fun panel because some people have told me just wind up Hunter and let him go. So
it's quite a setup.
It's quite a setup.
Yeah.
But the way we like to do this and what we've done in the past is, I know there are cards that have been passed out. These guys love it, and I love it as well if there's interaction in terms of you guys asking questions. Because if it's just a ping pong match up here, people get pretty bored pretty quickly. So while these guys begin on a few topics that we're all interested in, feel free to write down some questions, and they'll bring them up here, and we'll sprinkle those in throughout this, the next 40 minutes or so. So let me begin first off with just sort of a general question. We'll start first with you, Andrew.
Sure.
Which is the operational metrics of the airline industry right now, where we are and whether or not perhaps people are missing the point when they're looking at where the airlines are right now.
Yeah, no, I would certainly agree that in aggregate as an industry, you've seen things getting better over the last 5 to 6, 7 years throughout the phase of consolidation. And since the great financial crisis, I mean, I think, there's two things really driven by that. One, it is consolidation. I think consolidation does help make people have more scale at airports in terms of the context of being able to really focus a lot of investment on facilities to, reduce bag claims and improve connection times and things of that nature. I think there's been a lot of investment in customer service. I also think that in general, there's been a lot of investment in the customer experience and operational excellence over the last couple of years. And my guess is over the next 3 to 5 years, you'll see it even get better.
And yet, Susan, I know you haven't launched coverage yet, so we're not going to get into specifics, but overall, if you went up to most people on Wall Street right now and you said, what do you think about the airlines? There's sort of this look of the best days are gone and steer clear of these stocks. Thoughts?
Well, I would say, it's interesting because I've stepped away from Wall Street and I've come back. So I've really kind of looked at the industry and, it's, I don't want to say it's different this time because I think we've heard it before and I think we may have to, look through, a downturn and see how we do. But I think, financially, they're certainly a lot healthier. We've got dividend. It used to be just Southwest, and now we've got, certainly other airlines. We've got buybacks, in progress. So, these are really acting like real companies. So, if they keep it up, I think, you may get a more positive sentiment, towards the sustainability.
Hunter, when does that sentiment change? Because we were talking beforehand, you've brought down, your earnings estimates by just 2% or 3%, and yet these stocks are down, since June, about 20%.
Everyone always overreacts in this industry. The investment community overreacts, but when things are good, when things are bad, and it's easy to forget how bad things were because suddenly they're so good like 3 months later, and you forget it was really that bad 12 months ago. You just forgot because it was so good for the last 4. Mm-hmm. So, airlines reported earnings in late July, and there's some pricing pressure, right? Like pricing ebbs and flows. Demand is very, very choppy as a function of dynamic pricing, which creates choppy demand, but that's another conversation. But the point is, to your question, we cut our 2018 aggregate EPS by 2% since earnings, and the stocks are down 21%. Since earnings, I'm sorry to remind you of that, Andrew.
I know. I can confirm that.
Yeah, so the point is when stocks move because EPS goes up or down or because multiples go up or down. And when you have a 2% reduction in earnings forecast, let's just assume my forecast is right, which obviously it is, of course.
Of course.
Then the remaining 95% of the move is from valuation. Right. And that's either because the market doesn't believe my estimate, which it doesn't, or it thinks that the industry is just falling into the same old problem. So that's sentiment, that's emotion, that's capitulation, and that's when, I think smart investors take advantage of that disconnect.
You and I have talked about this in the past. Doug Parker is a big advocate of let's get away from this fixation on monthly and quarterly revenue per available seat mile, whether you go passenger revenue or total revenue. And despite what he's saying, making a lot of sense, I don't get the impression that that's going to change.
Well, they
anytime
keep
soon.
talking about it. They guide to it. They put it in their press releases. Nobody's holding the gun to their head to do that. You know, they don't do it monthly. Big
Starting to
deal. You
scale
still
back
put it
a
in your
little
press
bit.
release. You still
Yeah.
talk about it.
Yeah.
It's their fault. They invented it.
So your message to Doug Parker, if you were sitting outside right now,
Just whack the dog,
would
man.
be stop it. Don't you guys are creating this beast.
Take it out of your press release.
Yeah, or maybe focus more on the margin.
How about
I mean,
giving
that's-
annual EPS guide?
And so then
Yeah.
what would be the metric that you would advise investors to look at?
Razz them until the airlines stop talking about it.
But if they do stop talking about it, then what?
I'd
Earnings
say
and margins.
margin.
Yeah.
Yeah.
Margin.
I
You got to
just
get
love-
away from the increment, the little stuff, macro, margins. I mean, that's where you're buying, right?
I think we've got a chart that we could call up, taking a look at the profit margin for the airlines. And Andrew, we talked about this last year, that the growth that has been exhibited by the airlines over the last 4 or 5 years, it is continuing gradually to move higher. And yet, overall, you hear people occasionally say, yeah, well, these guys it's okay profit margins for the airline industry.
Look, I think from the context of it's phenomenal relative to history. I think,
Right.
And that's another thing that kind of comes into the valuation argument. They're like, oh, it can't get better, so I should put like a peak multiple on it, which means like a really low multiple. I think we're just really early on in the evolution of what's going on in the industry. I think that, I hate to use a railroad argument, but I cover those too, so it's easier for me to go back and use an analogy. It takes years. I mean, it's very funny because American Airlines emerged from bankruptcy in December of 2013. And I would just tell you this year, they really kind of first started executing as one airline. I mean, I think people, especially on Wall Street, assume some of this stuff takes 3 quarters, maybe to a year to integrate. It really doesn't. I mean, they have 125,000 employees. It's hard to get them rowing in the same direction. My view is what the industry needs to continue to generate margin improvement from here, and I think they can, is stability on 2 lines of the income statement, and it's revenue stability. And it's cost stability. And I think over the last year, we've been experiencing some cost stability where revenue stability was starting to come back. And then now we have inflected, kind of in this quarter, and maybe next quarter we'll see, to additional revenue instability. And I think, when you're a person like me valuing these businesses to decide if you want to buy them as stocks in the market, volatile, pieces in the 2 key aspects of how you drive fundamental results and EPS estimates. Stability creates lower multiples, instability creates lower multiples. More stability would get you those multiples that all the carriers want. I'm one of these people that have stood up here and said that I think it's a different industry. I think it's a different industry, not just for investors, but I also think it's a different industry for employees, and I definitely think it's a different industry for travelers. I think the next 3 to 5 years, and I've also said this up here, the traveling experience will get demonstrably better. The J.D. Power surveys keep going up. But margins can go up from here. I think we just need to reduce the volatility in what goes on, every year.
We'll talk about the customer experience in a second, but I have one last question when it comes to financial metrics. Do the cost pressures that come along with new labor contracts, Susan, do they worry you at all, or do you look at this and say, this is fairly normal in terms of what we should have been expecting for the airlines as they come through these new contracts that they've signed over the last year or 2?
I would say it's pretty normal. I mean, I think you've got some pilot shortages. You're going to have pressure in general. I think what the airlines are doing is a lot of cost initiatives. They're all, in a way, the labor contracts are forcing them to keep looking at their houses and what they can do to fine tune. And then you also have obviously the LCCs, the growth there. I mean, that's really putting pressure, I think in a good way, for a more efficient industry. You've got a lot more competition. Competition overall is a good thing because it really makes you efficient. So, that's my opinion.
Yeah, let me just add something to the labor stuff. If you think about how labor costs are going up, they're doing it through far more efficient ways. Like if you look back from 1990 to the year 2000, labor chasm or cost per available seat mile in the industry was up something like 35%. but labor headcount was up about 45%. And if you look back to the trough of wages back in the 2004 timeframe, labor CASM is up about 45% today since then, but full-time employees, FTE, is actually down 2%. So it's incredible that wages have gone up so much, but they're doing it with fewer people from the trough period. So what that means is that they're being more efficient, they're being more productive. It's also a function of airlines investing in things like kiosks and apps, allowing customers to be more self-sufficient, which is what they want anyway. So these raises they're giving out, it's not, it's not commensurate with the amount of bodies that they're adding, and that's efficient, and that's productive, and that's high incremental margin stuff, and the airlines can afford these raises too anyway. So
And they have more seats in the aircraft.
yeah, exactly. And a lot of that stuff is enabled by decisions.
I would
they've
also say too, in the eras of concessions by labor to keep the airlines alive, which we saw especially in the 2000s, and if you kind of go back in a rough way and do the math from even like the early 90s to where we are now, I think most of the major labor groups are finally caught up with where they would be if they just had inflationary raises from that time period. So I would be surprised if we saw step function raises from here. I think it'll be a little bit more inflationary. And more predicated on the profitability of the overall entity, especially since some of the profit sharing, mechanisms are in place still today.
And it is a customer service
Yeah, you want these
industry.
guys to be
You want these
happy.
guys to be happy. I mean,
Get regulators off their back and everything like that.
Let's remind everybody, if you have a question, do not hesitate to write it down. They will bring them up here to us, and I'll sprinkle those questions in throughout the next half hour or so. Let's talk about the low-cost carriers, and I believe we have a chart up here that shows the Southwest and the low-cost carriers and their growth relative to the quote-unquote legacy carriers. Hunter, what do you think about where those two groups are positioned right now?
Well, there's ultra low-cost carriers, right? And
Right.
there's like low-cost carriers, and there's the tweeners, and there's the legacy guys, right?
Right.
So I think the legacy airlines are going to have to just focus on the type of customers that value the networks that they've built. And there's going to be some investment required. There's going to be always price competition for some of those marginal passengers, but low-cost carriers are not going away. I do think that the geography of this country and the population centers being so far apart, East Coast, West Coast, is not conducive to replicating what's going on in, say, Europe, for example, where Ryanair and EasyJet have a lot of short hop stuff, major metro population centers relatively close
where
together.
they can pick off
400-mile flights.
Yes.
Right.
Southwest average stage length, Spirit's average stage length is 1,000 miles. That's pretty long. It's not productive. You hear Gary Kelly bemoaning over the last 15, 20 years the lack of short-haul travel. It's because that's highly profitable stuff. That's
That was the bread and butter for them.
Yeah,
the
big
model
time.
going
And they're
up,
still
yeah.
doing great, obviously. But I think that caps to some extent the amount of penetration from ULCCs in the United States relative to, say, Europe, where it's far more prevalent.
Andrew, thoughts?
So, the one thing that I would say on the ULCC side, did I add an extra C there? I'm not quite sure. We keep doing alphabet soup in this industry. It's hard to keep up with. I think if you, this is going to sound very macro, but if you look at the income distribution in the United States over the last 30 years and how it's evolved, it makes sense for the product to evolve a little bit as an airline because, if you look at the traveling public in the United States, there are people who, from an income distribution side, they want a much cheaper option, don't care as much about the thrill. So there is an aspect of the market where you need it. You've had smaller city service go away to a certain extent, at least on a nonstop basis. That maybe there are some connecting routes they can get most of those folks to leisure destinations. And so I think there's a model that works for that. Their cost advantage is largely predicated on the fact that their high utilization in terms of hours they fly per day, and then also density, seat density. So from that perspective, those are the two primary drivers of the benefit. For business travelers, though, I think it's really hard to move away from the American, United, even Southwest, and Delta platforms because the utility of those schedules is just hard to beat. For my own personal travel, I'm one of those notorious people that the travel department hates because I will change my flight the day of, probably, 25% of the time when I'm flying, and then choose to fly somewhere 50% of the time I'm flying like a day or two out.
And that's where the schedules of the
And you don't
legacy
wanna worry
carriers
about
And
come
that's
in.
where it comes in because I know I can go somewhere on any of those four carriers. I live in Baltimore, so we fly Southwest Airlines a lot, and there's so many frequencies to so many destinations that I need to go to. If you're in Dallas or you're Chicago or you're in Charlotte, Atlanta, all of those places, you have those choices in that schedule utility that's very valuable for you. So I think you should pay more for that.
And you don't worry about your bags.
Yeah, and then,
I mean, that's really.
Exactly. No, it's totally true. I definitely think the loyalty programs matter a lot too when differentiating between those larger carriers and then the ULCCs.
And the corporate traveler.
And the corporate travel. So I think there's a place in the market for each one of these carriers. I don't think you have to say, I'm a ULCC guy or I'm a big network carrier guy in terms of from an investment decision.
I've got a series of questions I'm going to start each of you with one of these questions. And Susan, we're going to start with you. Assuming that oil recovers over the next few years, and I think we topped 55 today, or yesterday topped 55, how high can the price per barrel go without having too much of a negative impact on airline profitability?
I think that's I guess it depends on fuel efficiency. I mean, you are seeing new aircraft coming on. That's a lot more fuel efficient. So I'm not sure I'm going to get pinned down to a number because I think it's fluid. I think if you look at the dependence, I mean, right now you've got operating expenses that are I think it's 20%, I think, fuel now, versus almost 35, 40, beforehand.
40, yeah.
So, I think there's certainly some room. I think what tends to happen with rising fuel prices is ticket prices go up. So, I don't, I think that relationship, it has to, maintain. So I don't think rising fuel prices is going to kill the industry.
And by the way, we have a chart up here that we call up, taking a look at domestic fares. I get this question all the time from people. Oh, domestic fares really changed? Well, I still feel like I'm paying a lot. This gives you some sense since 2010 till now. They topped out in 2014, and it has since trended lower. Next question is for you, Hunter, and I thought I'd give you a real softball with nothing controversial in it. Wonderful. It says, United's underperformance, is it the horse or the jockey?
I'm glad you got that one.
We could go a couple different ways here.
I mean, so look, that you don't turn around a company like that that's underperformed overnight. I think it's probably a function. I think it's probably more the horse. If I'm thinking about this analogy properly. Look,
the airline overall.
Look, United is blessed with major presences in most major metro centers in the United States, in New York, Chicago, Los Angeles, San Francisco, but they're also cursed with that too because they're in a lot of these places, but they don't really dominate a whole lot of them. So I think their network is more prone to competition than, say, Delta's, who has a dominant, their top most profitable airports are Atlanta, Detroit, and Minneapolis. There's only one airport in town in all three of those places, and they have 70+% market share in all three of those places. American's got one or two of those places as well. United doesn't have any of them. Their average share in their top four hubs is like 15 percentage points less than than Delta and American on average. And the problem with that is that it's not so much that you can charge high fares when people want to go. It's that, in my opinion, there's a floor on how fares go on off-peak periods. And you're willing to accept like a 65% load factor on a Saturday afternoon because you're able to maintain some pricing integrity. Whatever. There's other things as well that they do. Long-haul flying, yields do not increase commensurate with stage length. So, that's generally kind of a margin drainer. Their flights are much longer, much more international footprint. There's only so much that a guy like Scott Kirby can do there, for example, which I think is your jockey in this analogy. There's only so much that can be done to mitigate that. So I believe that United has a permanent margin gap deficit to both American and
that was
Delta.
my follow-up question. Is it permanent, Andrew? Is it time for people
They can be higher than they are now.
They can be higher, but will they ever
the
be
gap.
as high as the Deltas?
I think it's really hard given the market share
Yeah, there's a
issue
lot of
in
things.
terms of
That's
where they're
just
at.
one.
And then I would also say, like United always made more money internationally than it did domestically. And that's something that I think Scott Kirby is trying to fix there. And obviously there's an institutional imperative to do so. I'm one of those people that, I think it takes almost everything going right for them to close the gap with a company like Delta because I do think there's some structural advantages there. But that doesn't necessarily mean it's not a good investment. I mean, I think to be honest with you, from here, if they make significant margin progress, ignoring the whole comparison of closing the gap, that's actually a really good investment from here. So I don't think that, I don't think it has anything to do with the validity of the investment case, but I'd be surprised if they could reach the Delta type numbers.
Yeah, they don't have to close.
Question for
Don't
you,
have to
Andrew.
close the gap.
What do you make of Warren Buffett's decision to invest in airlines after disparaging them as investment vehicles in the past?
Well, I can tell you, to start off, I can tell you the first time I did this, what was it, 4 years ago? 3 or 4 years
Something
ago.
like that,
I almost guaranteed you were never going to have to ask me this question. So I'm actually, I think it's really, I think it's interesting from the context of who he bought. He bought the 4 largest carriers in the United States. Now, granted, on the scale that Berkshire is, it'd be hard if he went in there and bought Spirit and Allegiant and some of these other carriers too that were kind of like a drop in the bucket relative to the size of his company. But I think it's interesting, in terms of the scale of the investment that he did in each one, it's not that differentiated. So we kind of bought them as a
bought
group.
a basket, so
He
to
bought a
speak.
basket, and it's not like he bought a small little chunk of one and a big chunk of another one. I think it is a massive seal of approval. I don't necessarily know if he would characterize it that way, but for someone who's been investing in this industry since the end of 2011, I would certainly say that's how we view it. I would not be surprised if in the next downturn he did something like he did with Burlington Northern and buy these assets, or one of them, when the prices were kind of like...
Could you see, Susan, Warren Buffett, obviously, this is complete speculation. Could you
Sure.
see him at some point, or Berkshire Hathaway at some point saying, here's a distressed airline, a decent-sized airline, let's buy it?
I think I would, but I think it will be interesting how distressed they get in the next downturn, because I do think there is more of a discipline financially, I think, cost, et cetera. So I don't know if margins are going to get that low the next downturn for him to be able to do that.
Might.
The stocks might.
Stocks might.
That's very true.
No, but
Yes,
in
really.
reality, in all seriousness, I think every one of those carriers makes money in the next recession.
Yeah.
I will say that flat out.
Hunter, that leads to the next question, which is the big question on Wall Street is the sustainability of profitability and the profit levels that we're seeing from the airlines right now. When does Wall Street give these guys, obviously we have to see the recession come, we see how they do, but how much of that is the topic that people are discussing right now on Wall Street?
Yeah, Susan mentioned that too, the recession test. You have to go through a recession. This is a test right now. I believe one of the things that is different about this industry, I think consolidation gets a little bit overrated as it relates to the structural changes in this industry, because there wasn't really a whole lot of network overlap between these airlines in the first place. So it's not like a traditional consolidation, say like mining or paper or some other industry where you actually eliminate competition. It's been a little bit mitigated, but not really. But it's just, there's the recession test, but I can guarantee no investor wants to be involved in these stocks during that test. I think what you're going to see is dispersion of margins in a recession. The Delta, for example, will probably massively outperform because they have $1.5 billion of profit sharing that goes away out of their expenses, whereas American is only paying, what, Doug, $400 million in profit sharing or something this year? I cut them on email. So, they have
might go up
a little
every
bit
time.
less of a lever to pull on the cost downside. And of course, the interest expense, they paid down a lot of debt, that helps them too. So I do think that the margins are going to be more durable. I think certain airlines will outperform others. Leisure airlines will outperform because they can stimulate demand. They're less exposed to business travel, which stops in recessions.
That's the key.
That's a big problem. So you'll see leisure airlines continue to get, less downside on price in that regard. But yeah, this is another test that I always try to tell people, this industry has changed because it's more nimble now. Whereas something would take
And there's more of a
1-2
war
years.
chest, too, like
Yeah,
cash.
well, that's true too, right? It would take 1 to 2 years to adapt to a changing condition. Now I think they can do it in 3 to 6 months. And we're seeing price pressure right now. The stocks are down 21%. Well, let's look what happens in 1Q and even in 4Q pricing potentially when we get to it. It's probably going to be better than people realize because they're going to have adjusted.
Susan, do you believe basic economy will be an effective way for the legacy carriers to compete with the ULCCs long term?
I think for a certain segment, yes. I think there is going to be a, real no frills, rock bottom pricing. I don't think over time that the legacies are going to necessarily match that, because I don't know if it's a good idea for them to do that, from a revenue perspective. But I do think fair segmentation is here to stay. And I do think, however, that the legacies are going to continue to improve their products. for the business traveler, you know, and continue to really, hopefully, you know, focus on that because that is their bread and butter.
Andrew, the fare segmentation brings up the question of how nimble the airlines are right now and their ability to either expand certain classes or contract them. When you look at that, do you find that they are more proactive now than they've ever been in the past? And how much more can they improve that?
Yeah, no, I think they're definitely more proactive now than they have been in the past. I think one thing you will see as they invest more in technology over time is much of the segmentation is going to be more dynamically priced, not just by differentiation between basic economy and then also main and cabin and everything else about there, but by route, I think by time of day, stage length, all of those things. I think it's going to be, there's going to be multiple iterations.
And we're just scratching the surface on the route and time of day.
And you know why, Phil? Is because this industry is finally stable. And you know, I've said this in the past, but I think it's becoming ever more relevant. You know, if you're Doug at you know, American, because I can see Doug, that's the main reason I'm pointing him out. Is, you know, Doug finally, when he's doing capital budgeting with everyone, it's not like, okay, well, what can we cut because we've got to stay alive? It's, you know, what kind of IT can we invest in to make the experience better and actually improve revenue management and other things? We're at the cusp of that now. I mean, we're just starting a lot of this. It takes years to iterate on this. And I think the experience is going to be better, but also I think the revenue performance will be better as a result.
And also know customers' preferences.
Yes.
I mean, that's going to be huge. It's almost like the Amazon.
Airlines,
You know,
airlines are the biggest big data experiment I think that's out there.
Yeah, I think so too.
Hunter, I always love getting your perspective on the flying experience. And well, a few years ago, you had some choice comments on it, relative also to how the passenger views that experience and what they're willing to pay for. In the last year, as you've flown the airlines, various airlines, what are your thoughts in terms of the customer experience?
I mean, I think it's generally better. It's not, you know, talking like iterative changes, nothing, you know, evolutionary, so to speak. I definitely think there's been a lot more investment on the onboard experience as it relates to Wi-Fi, which is still horribly slow and ridiculous, but it's improving. But if you're willing to pay more for a better experience, I think the airlines are willing to sell it to you. I think that's important. You know, a lot of people buy these cheap fares and complain about it. Well, you know, just suck it up and buy Economy Plus or keep your mouth shut, basically is what it comes down to. So I think for me, it's generally been iteratively better. The operations generally, as you talked about before, have gotten a lot better. The self-help on the apps have gotten a lot better. I'm a big app guy.
Yeah.
I know I download updates to my app.
Much better.
Every time I open an iOS, I look for an update. It feels like there's an airline update in there somewhere. That's great.
Yeah.
So it's good. It's good, and the experience has to be good to keep regulators at bay. You know, to maintain some durability and stability, and the ability for the airlines to think about capital budgeting and everything.
We've got a chart, if they could throw it up here, taking a look at capital expenditures by the airlines. It doesn't get as much play as it probably should, Andrew, in terms of what the airlines are investing in and how much they're investing right now, correct?
Well, it gets a lot of play at my shop internally. I can tell you that. No, I think, look, airlines are investing in what we call like long duration assets, right? You know, they buy these aircraft, they're going to use them for 25, 30 years, certain points in time. So, you know, when you're replacing something that was on the books 30 years ago, I mean, the inflationary cost of it's going to be a lot higher. So, you know, some people in the industry kind of look at it and say, oh gosh, it's still a highly capital intensive industry. But, you know, I think the relevant point is, you know, they're investing in product, like, you know, if there was another chart that showed you the average age of all the carriers over the last kind of 10 years, and the average age, the fleets have come down. And so what does that mean? It means better dispatch reliability, it means a better product. And overall, that means a better customer experience. And you know, like you're seeing a lot of things like Hunter talked about, the Wi-Fi is not the greatest yet. I think advancements in technology over the next 5 years will mitigate that to a great extent. But I also think that, you know, look, I mean, a bunch of these carriers, I know American's doing it, Southwest is doing it, free onboard entertainment. I mean, like, you can now select a bunch of movies. So, I mean, it's pretty amazing what, you know, you're starting to be able to see for free. But from the CapEx perspective, a lot of the things that are non-aircraft that are going to be really interesting is the IT. It's the IT, it's some of the ground up stuff, it's some of the investment in terminals. They're going to make the customer experience a lot better, which I think engenders loyalty in general.
Susan, what's your outlook in terms of the Persian Gulf carriers and open skies and the push by the legacy carriers for the Trump administration to stop the expansion that these guys are going through here in the U.S. It gets a lot of attention, but I often hear people say, I feel like this is an argument that is made and made effectively, but it's never going to change. What do you think?
I think the concept of open skies, I welcome. I mean, I think, competition is always good. I think the argument of the legacy carriers is that, it isn't an even playing field, because they're getting subsidized. And, I do think that needs to be addressed because that, it's just not fair. On the flip side, you do have a number of the Middle Eastern carriers that are not doing so well. So this may just play out on its own.
Do you think it plays out, or do you think ultimately it takes the Trump administration stepping in?
I think it may just play out.
Look, I think after a while, in an era where you've had oil go down to 50 from 110, and my view is it actually could go as low as 25 and 30 again sometime in the next 3 years. I know you had a question about what if fuel goes up. I think the real question could be with some of the productivity metrics we're starting to see about some of the shale oil wells is could it go down again? But from that context, I think when you're losing money going nose up on some flights out of Dallas and Miami and New York already because you're charging such low fares, it's going to be hard to justify that economically over the long term.
And at some point, that's when you see.
I think it has to revert.
Yeah.
Hunter, if you look across all of aviation, where do you believe the next transaction will come from?
M&A?
Yes, I'm assuming that's the question from
I think Spirit and Frontier seem like an inevitability. While that's complicated, it's not as easy as I think a lot of investors would like it to be. They run different engines on their 320neos, for example, which is complicated. I think it does give them both a little bit more scale. I mean, not enormous. I think Spirit has 110 planes, Frontier has about 70. American still has 1,400 or something like that, so you're still very small compared to them. But they've been bumping into each other more and more. I think they had about 5% of their network in overlap about 5 years ago. Now I think it's about 25%. So they're actually becoming each other's problem a little bit more than they have in the past. I think regulators would have no problem with them consolidating. I think despite that comment around the overlap, because I think they could market it as being a even more disruptive or harder to push around consumer-friendly market force. And I think both of those guys could probably use it. I don't think either one of them necessarily need it. They're both consistently profitable and they're doing okay. But at some point, every business grows organically until the organic growth opportunity becomes less compelling, and then you merge and then you grow inorganically. And then I think another one, maybe you look at like Sun Country Airlines. That's kind of in a bit of a reboot right now. I think they're going to be in the crosshairs potentially, maybe with Allegiant. Beyond that, I don't see anything else happening.
I have one that I think, I mean, this is going to be a little bit off. I actually think the next transaction in the industry could be Berkshire buying one of the four.
Really?
Yeah. I mean, if we go into the next downturn, I could see that being fairly realistic. I mean, there's two other aspects of the airlines that nobody really talked about when they did that investment. Is they have the two defining characteristics that Buffett loves in insurance and some of the other businesses they bought, and it's deferred taxation, heavy use of deferred taxation, given the difference between book and tax accounting, and then also the free float concept. I mean, effectively, when we pay for our tickets, they get the use of cash. They get the cash early, so there's a free float context of that, and he loves the free float stuff.
And Berkshire has bought, Rails, which some have thought of analogous to airlines at times, and PCP, which is an aerospace company, NetJets. I mean, they fly airplanes, sort of the same thing. But there's kind of.
But how much of
all around it,
let's explore this a bit. How much of a discount would you have to see from one of the big four relative to their current valuation? How much would they have to come down before he says, now that's intriguing?
No, that's a good question. I mean, I think we'd have to get the recessionary type prices, and then he'd probably offer a fairly big premium on it that would be lower than what it trades at today. But I mean, if you look back into when he bought Burlington Northern in late 2009, it closed in early 2010, I think. That company's worth 4x than what he paid for then. He deployed $30 billion roughly to buy it. I could easily see that happening again. Great cash flow generating businesses, these big four airlines.
Right.
Certainly gotten a lot better industry structure. I think it'd be very difficult to, some of these companies have NOLs, so if he does an equity purchase, he still gets to use them, and he can use that to mitigate cash flow in other parts of his business. I mean, there's a lot of things that align for that.
Does that make sense to you, Susan?
It does. It does.
Yeah, I would say, are you going to say something?
No, go
Okay, airlines don't need to be public as much as they were before.
I think there's a few out there that don't want to be.
Yeah, exactly. These airlines
They're tired of doing all this
They're so
stuff.
tired of trading at 7, 8 times earnings. I'm surprised you did another transaction, maybe an LBO. We haven't talked about that. These guys, they're making money. They don't need to tap the equity markets for an equity issuance in the next recession in all likelihood because their balance sheet's been cleaned up. They can do it with debt if they need something at all. It's obviously easy to compensate execs with some equity grants. That helps for talent retention and all that other stuff. But these airline management teams are so tired of these calls where they're asking questions about their monthly RASM, which again, they brought up.
And Doug is nodding. Yes, I'm tired of these calls.
You keep putting it in your press release, I'll keep asking you about it. But at the end of the day, you don't really need the equity markets like you did back in 2006, 2007. So you go private, you mitigate a lot of these problems. You can be feisty, you can be disruptive, you can have a 2-month lag and a deceleration in your RASM, and what's the big deal? Yeah, so these equity multiples are just so low. Why not LBO the thing right now?
We only have a few minutes left. A couple of quick questions. Susan, let's start first with you. What excites you the most about what you're seeing in the airline industry right now? Just let's stay here in the United States.
I would say the new product, the fare segmentation. I think the innovation of. Is my mic going off?
It's cutting
Yeah.
out.
I would say fare innovation. I think technology really excites me. I think the use of it is just in its infancy. We talked a little bit about it. The customer experience, but I also think better targeting. As far as revenue generators. So I think the revenue part of it really excites me.
Andrew?
I think we're on the early cusp of harvesting big data that the airlines collect almost as much as any industry, and to be able to identify preferences and being able to dynamically price some of these products that they are segmenting now, and that could really help the industry, every single one of them.
Hunter?
Yeah, I have nothing to add.
All right, let's flip it. What irritates you the most about the airline industry right now?
The media coverage.
Nice. I like that.
It's the first question that got applause. I think that's phenomenal.
Thank you.
There's just so much fake news out there. In reality, though, it's not right. The regulation, which I think is these guys, they read the news too, and they see this stuff and they think this is bad. I'm going to go regulate them. It's United flew 125 million passengers or something like that last year, and one guy who didn't listen to directions got pulled off the plane, and suddenly it's this massive indictment of the company, whereas it was probably mishandled by them, surely, and the response was not good. We know that, but suddenly it's this epidemic. It's like when there's shark attacks, suddenly every shark attack is covered, and it's just people bought their cell phones and everything going viral. And it's very frustrating.
And I'm not defending the media, but isn't that partially, when you look at the airline industry, it's a lot like taxes. People want to bitch about it.
I know.
Even if you have a decent flight, people want to bitch about it, right?
Yeah. You're one of the good ones, by the way. But
I think that's probably right.
It's frustrating to read it. Let's put it this way. When I read the Wall Street Journal every morning, I read something about the pharmaceutical industry, something I know nothing about. And I'm like, oh, that's interesting. I didn't know that about that. And then I'll read an article about the airlines. Not just me throw out the Wall Street Journal, it's because of what I read. And I'm like, well, that's not entirely accurate. And it makes me question what I just read about the pharmaceutical industry because I know about the airline industry. So it's it's not always indicative of really what's going on and the level of investment through CapEx and IT. And these airlines are really trying very hard to make the experience better. But they continue to not get any credit for it. It's the same old, boring narratives. They're just beaten into a pulp over and over again because it makes for good fodder or whatever. So sorry.
No, that's fine.
Not you, by the way.
No, that's fine. Last question. Susan, a year from now, if we come back here, the four of us, what airline do you think is going to be generating the most? Buzz might be the word that I would use, but maybe that's incorrect. That's going to be the most intriguing over the next year to watch?
Well, hopefully in a good way. I think it's just going to be interesting to watch the big three, and I think their innovation. I think just given that I haven't launched, I'm not going to pin down to a specific
All right,
one.
Andrew, I'll let
that was
that's
a
fair
very
enough.
smooth way to get out.
Andrew, go ahead.
Look, I just saw Doug, but I am. I am going to talk about it, but full disclosure, we're the largest shareholder of American Airlines. I actually feel like there's a lot of things going on at that company that people forget that it takes a really long time to integrate an airline. They're about to unveil a lot of stuff that I think is going to be very, very beneficial, not just from the customer service side, but ops side, and I think revenue production side. So it'll be an interesting story in terms of people. That may be the one who catches up a little bit faster to the Delta margin profile than the United one, which kind of talks about it a little bit.
You got 30 seconds.
I completely agree. American is my top pick for that reason. I think of all the mergers that have occurred, I think that one is sort of the most sort of like Frankenstein-y from a fleet perspective, where I think there's a lot of efficiency that could be coming in the next few years on revenue. I think the CapEx, we know that the CapEx budget is probably peaked this year, so you have a little bit of improving cash flow story.
Definitely peaked.
Yeah.
Definitely peaked.
Yeah, so you're going from 5.8 billion in CapEx into 4. So whatever, I think, but I view, look, investors love revenue stories, and I think there's an absolute margin growth story embedded in America, and that's enabled by better revenue. And I've done a lot of work on this myself, and I think you're going to start hearing about that more in the coming weeks, actually. So.
Hunter Keay, Susan Donofrio, Andrew Davis, thank you very much.
Thank you very much.
It worked.